Hi guys, welcome back to my YouTube channel. In case you're new on my channel, my name is Abidemi Abbas. So please click the like button, subscribe and turn on the notification button as well. So today we're going to be talking about DeFi, decentralized finance and cryptocurrency. So please keep watching. Today we're going to be talking about decentralized finance and cryptocurrency. But before we begin, I want you to familiarize yourself with a Yoruba saying that says, ignore the noise in the market and focus on the market. So now if you Google into Bitcoin or cryptocurrency, you're going to be seeing so many articles popping up online. You're going to be reading so many opinions. Now those are the noise. So what you need to do is you need to focus on the market and ignore the noise, and that is what we're gonna do today in this video. Right, so for you to understand DeFi, decentralized finance, you need to understand Bitcoin. So Bitcoin is a decentralized money. So for anything to qualify as money, it has to satisfy these three things. It has to be a unit of account, it has to be a medium of exchange, and also a store of value. So Bitcoin qualifies for these three things. Therefore, Bitcoin is money. However, Bitcoin is a digital money. It's a decentralized money that is not controlled by any bank nor any government. But now what Bitcoin lacks is Bitcoin is not a financial system. Bitcoin is just money. So what is a financial system? So a financial system is a medium that connects investors, borrowers and lenders. However, that is in the traditional space that is controlled by the bank and the government. But when we talk about DeFi, decentralized finance, this is a medium that is built on a blockchain and smart contract. It's not controlled by any central unit. So this is a medium that brings investor, lender and borrower together on the blockchain platform, and they interact in an ecosystem through a smart contract. That is DeFi. Now, now to put things into perspective, Bitcoin is not a financial system. Bitcoin is just a decentralized money. Now, to put things into perspective, let's say you own 2 Bitcoin in the year 2017 when Bitcoin was worth $10,000 each. So that means you were going to be having $20,000 worth of Bitcoin. Good. So now let's imagine you have a short-term investment that you need to make, which is worth $10,000, and all you had was just 2 Bitcoin. Right. So for you to be able to make this short-term investment, all you had to do was for you to sell one of your Bitcoin, which is worth $10,000, for you to meet this short-term investment. Now, if you do that, that's gonna be there's gonna be an opportunity cost of you missing out on the upside gain of Bitcoin, since you're still bullish on Bitcoin. So let's now imagine within a week of selling your Bitcoin, now the Bitcoin price went from $10,000 to $15,000. So what just happened was that you missed out on the 50% upside gain of Bitcoin simply because you sold your Bitcoin for you to meet this short-term investment. All right. Now, fast forward to 2021 today. So if you need to do that, so for you to be able to solve that problem, meeting your short-term investment, so as of today, a Bitcoin is worth $25,000, right? So let's now imagine you still own 2 Bitcoins. You still own 2 Bitcoins, which is worth $50,000. So let's now imagine you need to make a short-term investment of $25,000. Now, today in 2021, instead of you selling one of your Bitcoin to meet your short-term investment, all you have to do is to take your Bitcoin to a decentralized platform. The popular decentralized platform today is on Ethereum, and is on the Ethereum platform, and you can access Compound. Right, so what you then do is you don't need to sell your Bitcoin. You're just going to borrow against your 2 Bitcoins. That means you're going to borrow $25,000 against your Bitcoin. So you still own 2 of your Bitcoins worth $50,000. You're just going to borrow against that Bitcoin. So what you then do is you borrow a stable coin. It could be USDT, it could be USDC, it could be DAI. So once you borrow that, you're going to be paying interest on that 25,000 that you borrowed on that stable currency, but you still have access to your 50,000, to your 50,000 worth of Bitcoin. So because you're still bullish on Bitcoin, you're not missing out. You're not missing out on the upside gain of Bitcoin. So let's now say next week Bitcoin goes back to 50,000 per Bitcoin. So that means you're gonna be having 100,000 worth of Bitcoin, and you're owing 25,000 to the decentralized platform. So that way you're not missing on the upside gain of your Bitcoin. All you just have to do is to pay interest on that 25,000 that you borrowed out from the decentralized platform through stablecoins. You're paying interest on that, and once you made your investment, you made profit on that investment, then you can now return the 25,000 that you borrowed into the decentralized platform, and that's it. You still have access to your Bitcoin. So what you've been able to achieve through that is you're able to lock in the opportunity cost of selling your Bitcoin. You're not selling your Bitcoin, you're borrowing against your Bitcoin. So your Bitcoin is the asset, it's the collateral that you use in borrowing the $25,000 that you need on the decentralized platform. Now, what that does is you're not going to be filling no form to have access to that 25,000 that you're borrowing. You're not going to be waiting for 1 week or 2 months to have a decision, for somebody to make a decision on your borrowing. And again, no one is going to be doing a credit check on you. No one needs to know your name. All you just need is the collateral, which is the cryptocurrency. It could be Bitcoin, it could be Ethereum, it could be Dogecoin, it could be any cryptocurrency that you own on the Ethereum platform, which is the popularly known decentralized platform, and that is Compound. Right, so we have other decentralized platforms, but the popularly known one is the Ethereum platform. So another thing you can do on a decentralized platform is you can earn interest on your crypto holdings. So instead of you holding your cryptocurrency in your wallet, so what you can then do is you can transfer your cryptocurrency to this decentralized platform, and you're going to be earning interest on that platform. So now if you look at it this way, the interest you're going to be earning with the traditional bank is roughly around 0.01%. However, if you check on the decentralized platform, there are higher rates of interest. So on Ethereum, for example, you can be earning around 4.5% interest rate on the BlockFi platform. So that is a very good rate of return on your money compared to you. That is a very good rate of return. So instead of you having your Ethereum, instead of you having your cryptocurrency in your wallet sitting there doing nothing, so the smartest thing you can do is to transfer them to this decentralized platform. You can use Compound, for example, or use BlockFi, for example. So I personally use BlockFi. I personally use BlockFi, where I earn interest on my cryptocurrency. So for example, on my Ethereum holding, I'm earning around 4.5% rate of interest on my Ethereum on BlockFi, and also I have my Dogecoin holding on Binance, and also my ADA coin holding on Binance, which I earn interest on. So that is you making your crypto work for you instead of you having them sitting idle in your wallet. That way you're going to be benefiting from the capital gain on your crypto, and also you're going to be earning a guaranteed income on your crypto daily. In case you're new in the crypto world and you need to buy a cryptocurrency, I'm going to be leaving my link below in Coinbase, whereby if you buy through that link, they're going to give you a free Bitcoin worth of $10. And also you can use my BlockFi link. I use BlockFi, so that is the platform where I earn interest on my crypto holding. So if you use my link on the BlockFi as well, they're going to be giving you some free crypto, Bitcoin or Ethereum. So now don't forget, there are some downsides to decentralized platform or decentralized finance, because imagine the higher the reward, the higher the risk. So this means you're committing your money to some computer programming, since it has no central unit. So if the programming fails, your money is at risk, and also your money in the crypto space is prone to hackers attack, and that's the reason why you should be investing the amount of money you can afford to lose in cryptocurrency. You know, just like I said in the beginning of this video, you need to ignore the noise in the market and focus on the market. So now it is guaranteed that blockchain technology and smart contract has come to stay, and it is no doubt that we are in a crypto bubble. But if this bubble bursts, are you likely to benefit? So this is like 1999 all over again. So in 1999 there was a dot-com bubble. That was the era of the internet. Internet was new to everyone in the market, and people were going crazy about internet, right? And because of that, we saw a dot-com bubble and a dot-com bust. However, we had companies that survived, companies like Apple, Amazon, and Microsoft. Now the question is, if the crypto bubble goes bust, what is going to survive? So imagine the earlier investors in Apple, Amazon, and Microsoft in 1999. You know the amount of wealth they are sitting on, and this is the opportunity we're having in the blockchain smart contract space today. So you need to stay invested on the market, ignore the noise. So focus on the market and stay invested, because if crypto goes bust, one thing I know for sure is the blockchain technology and the smart contract has come to stay. So this is the end of my video, and I hope you enjoy it. And please don't consider this a financial advice. This is just meant for educational purpose. Hi guys, so before you go, I have a goal of reaching 1,000 subscribers. Please share this video with your friends. Go on my YouTube platform, look up my videos, and anyone you like, please share with your friends and family, and please tell them to subscribe as well. Thank you once again for watching. My name is Abidemi Abbas. Thank you.